So the capital market now, with the hikes in rates and are lenders holding back? You in the circles of a lot of that's your niche. Is lenders holding back right now because of the hikes in rates?
I think multifamily is still a food group or asset class that people want to make, or banks want to make loans to.
Yeah.
The bridge lenders are out there. There's a lot of capital. So I think if the deal makes sense, it's going to get funded. I mean, if it's a good deal, if the sponsors have experience and underwrote the deal correctly, they'll get funding. It might be a little bit harder to underwrite with higher rates, but if the deal pencils, they're going to get funded. There's always capital. There's always ways to get deals done. So, I think there's opportunities to buy stuff with seller financing now too, and or take assumed debt. A lot of people are assuming debt now as well. Mm-hmm. So there's always opportunity. It's just learning to be I like the word deal architect. If you're a good deal architect, you can structure deals. Like you can do, you can do none of your own money. You don't necessarily. The beauty of this world is that the only thing that limits you is in here. I could go out today and find a deal where I structure it, where I come out no money out of pocket, whether I'm acquiring a business. Like I do a lot of SBA financing, for example, which is not a product we use for multifamily, but for business acquisition. I can go buy a business with only 5% equity injection. And so I could go buy a cash flowing stream with very little money, but need to know how to orchestrate these deals and then leverage. SBA works very well because a portion of the loan is guaranteed by the federal government. So banks, SBA doesn't make those loans, the banks do, but SBA guarantees a portion of it. So right now, in my mind, even if the market tightens up, the agency products, the government-backed products are still going to make loans. So it's just a matter of what the deal is. So like you can use SBA financing for self-storage, anything that's a business, hospitality, hotels. I'm just buying a business with no real estate. You can use SBA. So I haven't really I've seen a tightening, but it's still, there's hundreds and hundreds of millions of dollars of transactions, if not billions, going on as we speak. There's billions actually.
Yeah.
And that's not gonna change. I mean, what changes is that wealth creation changes. Somebody comes in and buys a deal that once traded at $40 million and buys it for $20 million. And then when the market cycles back, that becomes a $60 million asset that they just completely hit a home run on. So I think there's always opportunities, and I think you just got to be in the position and surround yourself and figure out what's working in this market and then implement those strategies. Mm-hmm. If you're a small-time investor or getting started, find that 12-unit building, that 12-unit apartment. Go get seller financing. Get high leverage bridge financing, and with a good, clear exit strategy to refinance into long-term debt. And the other thing is there's no I in team, so build a team. What I like about multifamily is that it's more of a team sport. You have the GPs, the LPs, you have the key principal. You put those pieces together, and the sky's the limit. There's nothing you can't do if you know how to harness the power of OPM, other people's money, and creative deal structure.
Awesome. Ton of value. You just had it right. And you made mention of one statement while you were talking. You said deal architect. I believe that structuring of a deal, being able to be innovative in terms of creating deal structure. Can you elaborate more about that?
Okay. So let's say I was buying a self-storage facility, okay? And I'm using SBA financing. Okay. On a business acquisition, I can get up to 90% of the total project cost financed from the bank via a SBA 7A or an SBA 504. They're two different SBA products. Okay. So I'm going to use this as a 7A. I'm buying this self-storage facility for $2 million, right? So that means I need to bring in 10% of that $2 million. And when we talk SBA, we're talking total project cost. So it's acquisition prices, any CapEx, working capital, that can be all financed. So the total project cost is $2 million. So I need to bring in 10%. 10% of $2 million is $200,000. I don't have the $200,000. I asked the seller, will you leave 5% on standby? Meaning, it's like a seller carry, except they can't get monthly payments. It can accrue interest. They're essentially leaving 5% of their equity in the deal. Now I have to come in with $100,000 to close this deal. I'm buying this 100-unit self-storage facility for $2 million. I'm getting the seller to carry back 5% on standby. So now I need $100,000. I go to you and I say, listen, I want you to own 19% of this self-storage facility. You come in with $100,000 and you're an equity partner. You don't have to go on the loan and you don't have to guarantee the loan. You become 19% owner of this self-storage facility. It gets underwritten, it gets approved. We close. I came in with none of my money. I own 81% of this self-storage unit facility. Wow. That's a little bit of deal architecture. Wow. You can do that for seller financing. You can do that with equity partners, OPM. You put it all together, and then the goal is like karate, right? You have belt system. You start with a white belt, blue belt, purple, brown, black. And you scale up. Right. The goal is for everybody to become a black belt in deal architecture. Once you're a black belt in deal architect, you can go in a deal and figure out how to solve the problem and create a bunch of money for yourself and for your partners. So that's the most important thing to do. There's a problem here. How can I solve this problem and benefit from this problem that I'm solving?